Hey everyone, welcome. This is Ryan B. from Practical FX Trading. This is the Euro US dollar weekly analysis for January 5th, 2020. So, just a quick reminder, if you want to stay up to date on all of our Euro dollar analysis, make sure you click that subscribe button in the bottom right hand corner of your screen. So I've mapped out this week's pivot points for the Euro dollar. These are the weekly pivots. And we look at price action from last week, right? I had that big rally where price really took off from $1.11 and topped out about the $12.40, hitting that weekly R2. And what we've seen, what we see here, just because of last week's kind of like increased volatility, our pivot points really kind of spread out. So, I've been saying here for a while, I'm bearish on your US dollar just because of this chart right here. So we look, this downtrend goes all the way back, 2018. And the reason why my trend line is where it is because it's, the support for this angle, these candle bodies, then becomes resistance. And there's a little bit of a buffer zone, right? It doesn't touch exactly because really when you think about support and resistance, it happens in zones. It's not a finite number. So, you always want to give your stops plenty of room to breathe, making sure that, hey, price could kind of travel around in these areas doesn't mean that the trend has changed necessarily. But so what we see happening because of last week's action is that price tested this $12 mark, which has been, support and resistance. Price kind of keeps zooming through it, so it's becoming less concrete. But we see at least 1, 2, 3. This whole area here, this congested area, 4, 5, 6, 7, 8, 9 times when prices, kind of turn one way or the other. And what was important about last week's price action is that even though price did move above that $12 mark, or more, actually this $11.80, if you will, is that price couldn't close above it. And that to me is significant because I think about support and resistance as a zone. And price can try to push into a zone, but then it quickly push back out. We see that happened here back in July, right? Price pushed into this zone, but then within a matter of days, traders sold it right back out to all new fresh lows. So what we have here is recently in October, we had our fresh low of $8.75. Then price, kind of zoomed back the other way. And it did make a pretty significant move all the way to $11.86, where it stopped out once, stopped out twice. Now, there is a little bit of a short-term uptrend going here, right? If we look at lows from October, December, it's still kind of trending up. However, in the big picture of things, that's not as significant as a trend line that's been descending for a couple of years, right? So that's our big picture. And we look and we see this pivot where price even goes all the way back to 2017. We see 2017 levels. And this weekly R1 we see now about $1.13. That's still holding. That's a pretty important point. We see price touch that exactly in November of 2016, June of 2017, August of 2018, etc. So, I'm looking to sell, and so we see weekly S1 possibly all down to $10.59. Now, what could happen is if price moves back above this $12, mark, with a strong bullish candle, then I'll be, paying attention, right? But it would take a new high above this $12.40 to reverse my sentiment on Euro currently. And even really, it could have a quick market rally to weekly R1 and then with a false breakout, sell it back down. So let's go ahead and zoom in a little bit closer, and let's put our moving averages on. So you'll notice on most of my charts, I add 3 moving averages, 20, 50, and 200. Oops. Okay. And then I go here and I change the inputs. Most of the time it becomes default. There we go, 20, okay. I'll make my 20 blue. It's my fast. 50. I'll make it red. What I'm looking for is bullish and bearish crossovers of the moving averages over themselves, like the lines crossing over, but also looking how price action relates to these moving averages, right? Price action meaning the price of the pair crosses over. So you can see here, right? So the last couple of weeks I was talking about how this 200 daily moving average hadn't broke yet, and it still hadn't. But we see now that after testing the zone, and it's still above it, so there's potential for this crossover. However, price has yet to prove anything yet, right? Still below this shelf. We had pretty big rejection at the end of last week because the U.S. dollar still is a stable reserve currency. So we've got tension in the Middle East, and even though it does affect the price of crude, the U.S. dollar is less impacted by crude because they are a bigger producer of oil these days than, say, 20 years ago. So price moving above the 200 daily average, it could be a little bit contentious here, right? Because we saw the other day, Friday, price went down but then closed above here. However, like we said, it didn't close above this shelf. Let's go ahead and look at the 4 hour and see what it tells us. Okay, so here's our 4 hour. Go ahead and ditch this volume. So here we see price moving below the shelf. However, we got the 20 to 50 to 200 in a bullish formation. So basically it's kind of, right, we're kind of moving sideways. But it depends on how you want to do it. If you're playing the short term, play a short-term day trade, then maybe you're looking to buy up for another test of this $12.20. If you're looking to sell, then maybe you're selling around the 1186 and you're putting your stop back here. Conservatively, you can put above this shelf. If you want to go a little bit further, put your stop below this, above that 1240. But once again, this term trend, even though for day traders it's very relative and current, it's really in the small, small pickings of things, right? Small fry. Because we go here, this trend line's only a few months old, and here we've got one that's descending for a couple of years. So as long as this shelf, this resistance here holds, which is this week's pivot point, which is interesting. So a lot of times we'll see price touch the pivot point during the week at some point. And then one of my strategies is use the resistance to sell, like my weekly R1 to sell, my weekly S1 to buy. So I got in last week here, selling, holding on, but as price goes down, I'm moving my stops here above this $12 mark, because this $1.12 mark, so price comes up, clicks me out, okay, gained a couple pips but didn't lose anything. So this is your uptrend here. This is your short-term uptrend. And this is like if you want a day trade. However, just make sure, be careful, whenever you go against the main trend, it can be kind of deadly because it can swoop your margin up, no problem. So there's your short-term uptrend, right? We see price ricocheting off of here. Price could fill in here, but here's our descending downtrend. So it's creating a wedge, and things get kind of dicey in a wedge, right? Price wedges make things real dicey, so we have to be careful there. But now let's say we're bearish and we're selling, then we're going to set up our chart this way. We get that main descending trend. Then I always like to set up what we call parallel trend channels. That means think of it as a support and resistance zone moving over time. Okay, so we go here and we say, okay, price closed below it here, below candle closed below it here, above it here, and now we see this holding. So there you go. So if I'm selling, maybe I'm selling around this pivot point mark. It's pretty near the top. It's not a bad entry point, but looks like price could go a little bit higher, right? So we got like contention here. Let's go ahead and look at the 1 hour. Let's get closer. Hopefully my lines stick. Okay, there, perfect. So the 1 hour is the only one that's showing a bearish crossover. The fast cross bearish over the 50. could, if this fast makes a bearish crossover the 1 hour, if we look historically, when that happens, we usually see price. This last time here, we look back a couple days, it fell about 70 pips, right? So if I'm selling, then I'm going to sell here around this pivot point mark. I'm going to put my stop above this last high, because if there's a new high happens, that means price is still going up, and at least for the short term, and I don't want to get caught in a big swing, right? So I'll pop my stop right above there, above last week's high at 1240. So that's $0 analysis. Price wedge action this week. Be careful, be cautious, and always have a great time trading. Make sure you use your stop loss.